Today, we're going to talk about how mortgage brokers and mortgage lenders rip you off. So the first thing I want to touch on is unethical lending practices. This video is exclusively recorded for realestatebees.com. Hi there, my name's Tyler Warrick and I am a licensed mortgage broker. Now the first one is going to be unnecessary fees. Don't let your lender take you for a ride. There's no need for these processing, origination, application, any type of junk fees out there. More times than not, they don't need to be charging these. They're just using it to pad their paycheck. The one thing that mortgage lenders do control is going to be box A on your loan estimate or closing disclosure. So don't beat up your loan officers based off of title fees or escrows because those are things that they do not control. Now, another thing that they can do that is unethical is steer you into a different type of loan program that benefits them. Now, mortgage lenders can do this for a multitude of reasons, so do your due diligence, ask a lot of questions, and figure out why you're going with one specific product as opposed to another one. Now, the last unethical practice that I want to bring up is specific to mortgage brokers. So mortgage brokers, by definition, are the middlemen, and they work with multiple different lenders to get you the best deal. And I see this time and time again where you've got a mortgage broker who works with 1, 2, maybe even 3 lenders because it makes their life easier. But at the end of the day, the mortgage broker is here to get you a good deal, regardless of how much work it takes. Now, if we switch gears into mortgage fraud, there's 2 main types that I want you to be on the lookout for. The first one's going to be income fraud, and the second one is going to be occupancy fraud. So let's break them down. Income fraud is when somebody lies about the borrower's income. Now, from the borrower's perspective, a borrower might lie because they've been told that they don't qualify and they need this mortgage. But what the mortgage lender might do is they might say that the borrower actually has more income. They might forge documents because this is ultimately how the lender gets paid. Now, if we flip gears over to the occupancy fraud, typically this is dealt with on the lender side because these lenders want to get a little bit more aggressive when it comes to rate and cost. But I have seen it where there are borrowers out there who say this is going to be my primary residence as opposed to an investment or a second home because they want to get a better interest rate. And at the end of the day, this is the reason why that type of fraud happens, the occupancy fraud, is to get better rates and terms. Now, a very, very frequent question that I get asked is mortgage protection insurance, is that a scam? Well, the short answer is no. And let's kind of unpack that here. So mortgage protection insurance should not be confused with private mortgage insurance, which relates to conventional loans. And it should not be confused with mortgage insurance premium, which relates to FHA loans. All 3 of those things are separate. So mortgage protection insurance is just insurance. Ultimately, what it does is it helps protect the borrowers in the event that somebody dies. The insurance company will pay off the entire mortgage. Obviously, there are pros and cons to any type of insurance out there. So I do implore you to do your due diligence, do a little bit of research and see if that's something that is going to be beneficial for you. It definitely has its pros, it definitely has its cons. So how can you as the consumer spot loan scams? Well, the number one thing that I can tell you is be curious. Obviously, you are not a licensed loan officer and no one expects you to be. However, you are probably getting into the biggest purchase of your life. And I do want you to be curious, ask questions, and understand what it is that you're getting into. And that's going to be your number 1 tip. Now, your second tip is going to be ask your loan officer how they get paid. So it's completely normal for you to ask this. Your mortgage loan officer, they're going to be diving into your financials. You definitely have the ability to ask them this question, so don't feel uncomfortable. But the reason why I want you to ask this is because certain type of loan officers get paid at different stages. Some people get paid to fund your loan, which is what you want because they only get paid if you get the mortgage. As opposed to other types of loan officers out there, they only get paid to either lock your loan or accept a deposit or a combination of the 2. Why is this not good for you? Well, what a loan officer could do is they could tell you that you are approved. They can say, hey, these are the terms that I want you to get. They can lock you in and they can take your deposit. They're paid. But for you, you still have to go through the underwriting process. And if you don't actually qualify, then that's not good for you. So ask them how they get paid. You want to align yourself with somebody who gets paid if your loan funds. And the last tip that I can give you to spot loan scams or different types of frauds out there is to ultimately be truthful and disclose everything that you possibly can up front. There's nothing bad that can happen to you if you give the full HD picture to your loan officer. You just want to make sure that you are disclosing everything, and I guarantee you, you'll be able to sleep well at night.